Once again, sorry for all the technical difficulties, but we're good to go now. So today we're going to be talking about the fundamentals about the markets and the market exchange. I've actually made a presentation for you guys so you guys can now know how the market works and be able to specifically dissect how the market is equivalently focused on the exchange market and how it actually intertwines and what are the differences between the foreign exchange market is to the stock market, to derivatives, to futures market, and crypto market as well. So I'm going to just get into this presentation, and I'm going to be answering your guys' questions as long as I go through this. I'm actually trying to figure out how I can actually have this available right here while I go through this presentation. So I'm going to be going in and out to be able to answer you guys' questions, but starting forth, we're going to be just basically going over how the foreign exchange market is assembled, what are the specifics, what are the structures, and so forth. And throughout this week, we're going to be going over a lot of these key fundamentals because what I've learned in the past is that once you get the fundamentals down, everything becomes very fluent. Even that we had a couple trades that we took over on Sunday that didn't go into our favor, we can always understand why it did afterwards, right? Because after you get the key elements and the key fundamentals down, you get to just look back and maybe retest or study why that didn't work. Because every losing trade isn't a lost trade, it's a learning lesson. You just got to learn from that lesson and see what happened and then be able to maximize off that lesson, because now after you lose once or twice on that same structure or same area, then next time you're like, okay, now this isn't going to happen to me because I know why price did what it did. So it's always a learning lesson, and I apologize for you guys to having those. The ones that over the weekend I had a couple of those trades that went south on us, but things happen, and from here on out we're trying to just basically knock out the fundamentals so we can be able to learn this and put this in our methodology. So as you guys know, the Forex market is 24 hours a day, 4 days a week. So I say it's 5 days because the market is open 5 days a week, but it closes 2 p.m. Pacific Standard Time and it closes 4 p.m. Eastern Standard Time. So you guys know that the market, fluctuates between Pacific Standard Time and Eastern Standard Time. Blanking out for a second. So it isn't open and close each day, so you guys know that you're able to trade it. We talked about different times of the market and different areas of the market are able to maximize in profits. We talked about the Tokyo session, how that's the most consolidated area where there's not a lot of range, and we talked about how the markets range in the London session and in the New York session. That's where you see a lot of volatility in the market as well. So just so you guys understand, this is just the fundamentals. I'm going to go into where are the best times to enter and exit and so forth, later on in this week's video, so you guys understand the whole basic blueprint on how I see the Forex market. So the Forex market is basically the biggest market in the world, right? It has $5.4 trillion traded on the market on a daily basis. It has low commission, meaning that when you have rollover, so a rollover means when you have a trade that is rolling over to the next day or over the weekend, the fees for that are very little compared to the stock market where the commissions are huge. If you hold a trade, it can be 15, 16, 20 bucks per trade, so you have to pay these commissions to your broker, and that's because the market is centralized, and the centralized market meaning that there's only one way in and one way out. So that's how the stock market works. So that being said, you guys, you're able to, swing trade a lot more money when you're doing Forex than you are holding in stocks, depending on what exchange broker you have, right? So this is theoretically just a universal concept of how the market works. So like I said, you guys, we're going to talk about strategies and so forth on the focus points on where the market is trading or where the most volatility is. So this is what a pip is. So a pip is a percentage endpoint. So percentage endpoint is the unit of measuring the price of a currency called a pip, which stands for percentage endpoint. So some standard often refer to pip as points. When reading a price quote, the single pip is the fourth decimal, you guys, place, right? Besides the US dollar, Japanese yen, we'll talk about earlier. So the fourth decimal, as you guys can see, is 1, 2, 3, 4 is this one, all right? So when you see these two decimal points move, that's when it's considered a pip. So if the AUD USD rises from 10520 to 10525, that indicates a 5 pip rise. Okay, guys. So if the AUD rises from 10520 to 10540, that indicates a 20 pip rise. All right. So that's what we see when we're trading in the markets, and you have a margin, or excuse me, you have a lot size, and the lot says you get $1 per pip, right? So if you were to get 5 pips, right, that's $5, right? And if you get $10 per pip, right, that's $50. Okay, you guys, and it goes on and on and on. So we'll talk about how that works with the markets itself. Okay, so the expectation of this rule, any currency pair that includes the Japanese yen, right, is only ever displayed with 2 decimal points. So you guys see how there's only 2 decimal points here. If you go to the Great Britain pound JPY, which a lot of people trade, there's a lot of volatility in that pair. It's those 2 ending decimals are equated to what pip or percentage is valued to that. Okay, so I hope that answers your guys' questions on what a pip is and how pips are working as well. Michael Jones, I'm back. Brenton, let's learn and learn. Hey, perfect, man. I'm glad to see you, brother. So we're gonna go into, at this point, I see that I was able to put down a comment as well. Interesting. So moving forward, you guys, we're going to go into how the pips are valued to the market and how those markets are able to master percentage gain. So high leverage currency. So we talked about pips. So I hope you guys understand that that's how pips are understood. Percentage in point. That's what a pip is. It's always the 4th decimal, right? The 4th decimal place. So we're looking at the 4th decimal place besides the Japanese yen, which is the 2nd decimal place, right? So these 2. So this is what you equate to pips. So moving forward. So high leverage currencies usually only fluctuate by a cent or so each day. So to make a substantial amount of money, you need to place thousands of dollars on a trade. Brokers recognize that not everyone starts with huge trading accounts, so they allow you to leverage your position. So you understand, guys, the foreign exchange market was established early in the late 90s. Okay, so basically it was an exchange rate that was transferred to gold, right? So every exchange or currency was valued to gold at that one point. So when we started to establishing all these other currencies, and then they started to value it differ, then we had to make a foreign exchange, because then we had to make a basically a key point to value each currency, so it's not lopsided, meaning that there has to be a polarity when it comes to the exchange currency rate. So that's when we made the foreign exchange, right? And then after that, banks and institutions were the ones that only traded on the foreign exchange market for about 20 to 30 years, until we started to see retail brokers come into the play in the early 2000s that were called retail market makers. Okay, and these retail market makers are the ones that started to give money to us speculation investors as leverage, because the thing about it, guys, that to get into an average trade on the ECB market, on the electronic connecting broker, it's $100 million, right? That's $100 million. We as traders don't have that kind of money. Speculation investors, we're speculation investors, meaning that we're just looking to make as much profit as possible by gaining knowledge, by gaining fundamental analysis, technical analysis, to establish a hypothesis, and this hypothesis evidently is going to make a profit for us, and we take that home to the bank and pay our bills, right? So speculation investing for retail traders didn't come into fruition until the early 2000s. But once it was established, we started to see a lot of brokers come into fruition. Forex.com, Orlando, Traders Way, and so forth, right? Dukascopy, and so forth. We started to see a lot of brokers now maximize and monopolize the speculation interbank trading markets. Okay, so on the advantages with OTC, over the counter Forex trading, is that there's always someone willing to buy and take your sell. So we have to think about it like this: we're working with banks and institutions when we're trading in the foreign exchange market. Just like I talked about earlier, the market was established on just banks and institutions, but then little brokers with a lot of money started to open it up to average day people like you and I. That being said, when we do an exchange, we are either trading with the money that is being so to get into a trade, someone has to buy or sell your order. Read what I'm saying? So whenever you're getting into a position, on the other end, someone is buying or selling that same position. So it might not be a person like it is mostly in the stock market. It could be a bank. It could be an institution. It could be the market makers, the liquidity providers that give you the money, right? There's a lot of people that can take it. That's why when you're in the foreign exchange market, it's fast execution time. There's not a lot of leeway. But in the stock market, since it's a centralized market, you could say that the NASDAQ is dumping, or say that you see Apple, it's tanking, right? You might be held with those shares because no one's willing to take your positions out of that market. So you're held with those until someone is willing to buy back or buy your shares, right? So that's what the understanding of the market makers work is that when you're trading in the market, you're always hand in hand with someone else or a bank or institution, right? So make money when the market is falling. Unlike traditional investment models, you can buy low and sell high. The Forex market offers trade to short the market as well. So that's the amazing thing about the Forex market, is that you're able to short the market as well as buy the market. So you have that versatility in the market and be able to structure and have a dynamic focus point, right? So with each financial market as it benefits and drawbacks, traits and quirks, right? It would be foolish to say that market A, market A could be you're trading options, is better than market B, which is Forex or crypto. You can't say that each market is different because everybody's making money or everybody's losing money. So no market is better than another market. It's just you have to strategize and understand these basic structures on where to put your money into to diversify, okay? So before we get into as we talk about the fundamentals, I do want to add this in because people do ask if I mostly focus on foreign exchange and if I trade. I usually do, you guys, but that's not my end goal. My end goal is not to always make money in the foreign exchange market, because the end goal is to considerably be able to make money without you doing anything, meaning that you have a cycle or a wealth cycle that's able to maximize whatever money you put into that cycle without you doing anything. For traders and speculators, they want to say, oh, you have a passive income. No. When you're trading the market, you're still trading and you're still having to make the money, right? The money's not just, even if you were to swing trade, right? Swing trading, yeah, but you're still having to monitor and make the money. And you still have that the ability to lose money and to lose profit, right? So you're trying to maximize, and as well as that it's a leverage wealth vehicle, meaning that what we're looking to do, you guys, is that have a foundation where you have cash, savings, and cash equivalents, right? It could be, whatever is sustainable for your guys' foundation, right? The investments, passive investments using the called the 5-dimensional wheel, right? You got stocks, you got bonds, you got commodities, and you got REITs, right? Investment, real estate, trust. And then you have your speculation, which could be crypto, which could be Forex. I just use Forex obviously in this part because, we're talking about Forex trading, but we can use crypto, we can use Forex, we can use other leverage vehicles, right? That are going to, because all it is that you're trying to, it's just like working out. You're trying to stimulate your muscles, right? Over and over and over again by doing rapid workouts. So each person has a different body type, so you have to work out differently, So what I'm saying is that each person has a different wheel and a different cycle that they have to follow that makes them a profitable or have a wealth generation portfolio or wealth generation wheel. But when you have these 5-dimensional wheels and you're able to apply them without leverage, that means you have a low property or a low drawdown or a low loss rate, right? You're not going to lose a lot of money because there's not a lot of leverage, right? Leverage is a double-edged sword. So if you take the leverage out of it, now it can compound interest, just like Warren Buffett. His investment portfolio is 90% S&P 500, 10% index fund, right? Or bonds, excuse me. So yes, 90% S&P 500 index and 10% bonds, because since he has so much money, he doesn't need to do leverage investing, right? Because why would he need to do leverage investing if he has billions and billions of dollars, right? A 3% return on 20 billion is, a lot of money. And if you do that over and over and over again, that's why he is one of the wealthiest people in the world, because he himself is multiplying money. And we talked about how Naeem knows a lot about how to multiply money. he talks about that, you guys, in his videos, how to multiply your money, how to multiply just your cash equivalent. So that moving forward, you guys, I hope that helps you guys in understanding that Forex is a stepping stone. It's not the end goal for, it's an end goal for a lot of people, but it's merely a stepping stone, because we don't want to have you guys trading. I mean, if you're a master trader, like we're trading all the time and we're mastering the markets, of course you're going to have fun. I mean, I'm going to always be trading to the day I die. I'm always going to be trading, but it's going to be different. I'm not going to be trading all of my money or 70% of my capital in just the Forex market anymore. It's going to be a diversified portfolio, so it's a lot more fluent in the markets itself. So I hope that understands what we're talking about when we're talking about the markets itself. So, whoops, sorry about that, you guys. Going forward, we're going to talk about the standard lots and each lot size, okay? So the foreign exchange lot leverage of profit. So a standard lot is 100,000 units, okay? So this is where the money comes into play. This is how we have to know how much money we need to get in every single market. Excuse me. So a standard lot is 100,000 units, which is $10 per pip. And we talked about pips, right? Percentage in point. So if you raised up 50 pips, right? We're looking at $500, right? So that's the thing about when you have a heavy lot size, which is a standard lot, you're looking at a double-edged sword, right? You can gain a lot of money, but you can lose a lot of money as well. So you have to take this into consideration, how your trading style works best for you. So a standard lot is 100,000 units. So that's a base currency lot. That's what a base unit is. A mini lot is 10,000 units for a base currency, right? That's $1 per pip. And a micro lot is 1,000 units, which is 10 cents per pip. So I'll show you guys how this works. So assume you buy 2 mini lots, right? So 2 mini lots is 20,000 units, right? AUD USD at 10500, and sell them when the price reaches 10600 at 100 pip price movement, okay? So like this can reasonably occur over a period of 1 day. A margin is the amount of money you put up to place the trade. So the margin is the amount of money you put up in a trade, right? So 2 mini lots are valued at $20,000 or 20,000 units, right? So a margin required. So say that you are an investment banker, right? That doesn't have any leverage, right? You're a proprietary trader, or you have an account that has no leverage. You would have to put up $20,000 just to gain $200. So this is what happened. This is why market makers, which are liquidity providers, which we talk about in our strategy bank, our strategy book, How to Trade Like an Investment Banker. We talk about how to trade like a proprietary trader, how to trade like a market maker. The people that are giving you the leverage, the people that are giving you these percentages, this is how you do the market trades, right? So a lot of people don't have $20,000 or wouldn't even willing to get up. I mean, who would give up $20,000 just to gain $200 of profit? I mean, you have to be crazy to do that, right? So that being said, this is why they made leverage, right? So the leverage is the possibility of being able to get the money from a institution, a market maker, to be able to put up that capital for you. So you only have to put up a certain amount of money to be able to trade, right? And that's called your margin. So when they say margin call, like, hey guy, you have a margin call, that's because you have to put up money, because your margin is not equivalent to the money that you put up. So you have to put up more money to assemble that margin, no capital, to trade in the markets, okay? So when the mini lots happen, say that we have 2 mini lots and you have a leverage to 100-to-1. Owana does 100-to-1. Forex.com, which is the broker that I use, does 100-to-1. You know, these brokers, they usually do 100-to-1, and they go up to 200-to-1. And I do recommend going to 200-to-1 once you understand and master the market, right? So we got to understand, you're trying to use other people's money, right? OPM, other people's money. Because when you're using other people's money to maximize on your capital, you're helping them by making them money, but you're also helping yourself by building up your portfolio as well. So you can use these brokers, right? That's why our program, Manifest Trade Mastery, that we have with Traders Profit Club, it talks about how the broker is your silent friend because it's giving you money to grow your future. But it's how you use this money, because you got to understand that 90% of traders aren't profitable. They don't know what they're doing. So you have to understand that. I say understand like 3 times. You have to maximize on the education that is given to you through Traders Profit Club to be able to sustain and move forward. So this is really key fundamental stuff, you guys, that is really important in your trading career, and learning this stuff is going to make you a lot of money over time, right? A lot of money over time. So we talked about the leverage, right? So the margin required is only 200 to gain the $200 profit, right? So this is what we're talking about. So obviously right now, when we're talking about risk to reward, this is a 1-to-1. We're putting up 200 to gain 200. This is a risk to reward. But the thing is that now we're able to get into the interbank, or not the interbank market, the foreign exchange market. We're able to trade in the market. We don't need a bunch of capital to get in the market now. The brokers are giving it for us. So I hope that answers some of your guys' questions on how the market is working and how you're able to apply. So the Forex market makes more liquidity. Exactly, Michael. What broker do you use for Forex? You recommend your mobile MT4. Michael Jones, I actually use Forex.com, and I don't really trade on my phone. I actually blew an account before trading on my phone, so I'm not a big, I know that it looks cool, and it looks cool for a lot of people, and I'm just being honest. I know it looks cool for a lot of people that trade on their phone, but I don't really trade on my phone. I like to trade on a computer. I like to see all of my formations on and I like to take my positions when I'm looking, and it's so accessible when you're on your phone, right? So say that, this is rookie mistake stuff that I'm talking about, where, you're trying to, impress someone, so you're taking a trade, and you're not being in integrity with who you are. You're just doing things, and it's so accessible when it's on your phone that you can be making dumb trades, right? So for me, this is how I personally do, is that I monitor my trades, and I do my trailing stops on my trade. So say that when I get out of the office, or I get out of my trading room, I'm looking at my trades just to monitor them and to be able to close my profits or see my trailing stops. I'm not using my phone to enter my trades or to exit my trades. I like to do that on my computer. And I like to actually watch my trades go into profit, and see them actually go. In drawdown state, it happens, right? We had a drawdown and we lost, 3-4 trades over the weekend. It happens, we got stopped out. It's perfectly fine, but I'm not going to trade again and again and again on my phone, because I know how that happens. I've blown an account doing that, so I do recommend, especially doing this trading strategy and using the strategies I'm teaching you, to be on a computer, because you're going to have to map out the M and W formations. You're going to map out the Fibonacci. You want to see the full scale on how you want to see at previous market structures. You want to use you want to use this, because this is not a game. This is your business. This is literally your livelihood, right? And it's not a game for a lot of people want to take it as a game, and it's not. It's really important to use it. And yes, I do use MT4. That is the platform that I use, MT4 or MT5. And it's super easy. You just integrate your MT4, MT5 with you can use it with TradingView. You can integrate with TradingView. You can integrate with MT4 with Forex.com, any broker. It's really easy. You just type it in, and it has the broken servers, and then you put your account in there. So hope that answers your question. So having your 200 margin leverage up to 20,000 sounds great, right? Well, like we talked about, you guys, high leverage means high potential profit, which also means to high amounts of greed, right? So this high amount of greed can manifest into low success over time, right? This is why we talk about in our program, we talk about the mindset, how to overcome that fear, overcome that greed, overcome that FOMO, that energetic feeling that you have to get into something that it's literally eating at you. You have to learn how to be very malleable and to be able to master the art of really synchronicity and peace. Because if you trade in the markets and you don't have that synchronicity, or you don't have that feeling of that calmness, you start to see things differently, right? They say that fear is false evidence appearing real, because that's essentially that's what it is. You're feeling an energetic vibration that is starting to put smoke and mirrors into your natural vision, into what you can see as the markets start to establish in your eyes, right? So we look for these leverage, and we want to tell you guys that always, always, always practice, 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 practice before you get into these markets, right? If you haven't traded before and you're just looking to get into the trading markets, practice on a demo account, practice on a emulated market. Use MT4, use TradingView, use all these other accessible emulated markets and practice, right, before you get into the markets, because this is really essential that once you start to discipline your subconscious mind into trading like you're trading with real money, when you put real money in, and I'm talking to you guys from literally how I did it, your body and your mind starts to do the same reactions as it was with a paper account. It doesn't, there's no restriction anymore. There's no like difference, you know. This is where you start to make a lot of money, because you're not trading and you don't bring that energy of money into that into the stirring pot of your manifestation. You just allow it and you accept it, and now you become a discipline factor, and now you just automatically have this methodology, which we talk about with So Firm, which my trading mentor, you know, taught me, is that a methodology is what creates your trading portfolio and your trading profits. You have to have a without hesitation. Okay, I see this M formation. Okay, boom, take that profit. I see a W formation, reversal. Oh, I see this market stop hunt, or I see this market gap. You know, you have to understand that these are just creating your subconscious mind to automatically be able to get into a trade, whether it's a winner or a loser. You would rather take a position that you constantly take over and over and over again, and sometimes you lose it. Sometimes you lose those trades. Guys, you're not going to win every single trade, but over time, you build a confidence. And when you have confidence in the market, that's when you start to make money, because insecurities shows in your trading log. Insecurities show in your profits. Insecurities show in your losses. You have to understand that you have to have faith in yourself. You didn't just study all this stuff for no reason. You know, you study this to have confidence in your ability to make money. You know, that's the key element and why we trade. So Michael, can you use computer 5 with 8 GB for charting? What exactly do you mean by that, Mike? I just want to double check. And what if you recommend a funding trading account? What is your recommendation? Trading only in mini lots. So if you're trading mini lots, I suggest having an account for like 3,000. You know, you can even start an account with 2,500 and be completely fine. I mean, it's not, you're not trying to, you know, put a bunch of money and save a bunch of money and then put in the market. Actually, that's not the smartest thing to do. You want to first see if your strategy works, right? So you want to test your strategy by seeing if it works, right? So I didn't start out with, you know, thousands of dollars in my trading account. Of course not. You know, I started out with $400 in my binary options account, and then I turned that 400 to 2,000. I turned that 2,000 to 4,000. That 4,000 is 5,000. You know, and then I got into Forex currency trading, right? And I started with the $5,000 account, and then I took 5 to 6, 6 to 8, 8 to 12, you know, and then fluctuated 12 to 4 or 4 to 4 back to, you know, 25. So like, you have to understand, you guys, that it takes time. It takes patience. Like, you don't want to put a bunch of money into the market, especially if you're not, you know, been trading the markets for a long time. You don't want to do that. You only want to put a lot of money in the markets once you have a highly successful strategy that you know that the more money you put in, it's going to make more money over time. If you just want to put a lot of money in there and, you know, gamble it, you know, it's not a good idea, because you're going to have that stress when you lose all that money, and you're going to try to have to build up that confidence again. I'm talking to you guys from experience. You know, you got to build up that confidence once again. You got to build up that tenacity and that courage and that discipline and that ambition once again. You know, it takes time. So I do recommend starting off with like a $2,500 account. And this is just my opinion, you guys. You can start off with $500 in the market and see. I've seen people flip a $5,000 to $1,000 account into, you know, $5,000, $6,000, $7,000 within a couple months. So it depends on your risk to reward, depends on your strategies, depends on how do you like the markets and how the markets work for you. So I hope that answers your question, Michael. A computer with Intel 5 processor with 8 gigabytes. Yeah, you'll be fine. Yeah, that's completely fine. You'll be very comfortable. You don't need a lot. I mean, I used to trade when I was, you know, when I was just starting out, you know, I started on an Acer, like very small Acer computer, and I was trading on there. So like, you know, my backup computer is like a HP. I bought it for like it's an Intel. I mean, bought it for like $500 at Staples, and I traded on this puppy for about 3 years. So like, you know, you don't really need that. Trading setups are amazing. You know, if you have the money to do, you know, 5-6 screens and stuff like that, and you're an intraday trader and you want to be able to scalp and look for percentages, that's a must. It's a part of your business. This is a business, so you have to be able to be the best at your business, so you get the best tools to maximize on your business. So yeah, so that does matter. But as for like if you're starting out, don't put a lot of money into your trading equipment just starting out. First, become profitable, and first like start to see consistent value, and then start to just like anything, you know, wait for you to start to see profit, right for you to start to see things come to fruition before you start to add on things. It works better, right, for you and your psyche. So I hope that answers a lot of you guys' questions on how these strategies work, the basics and fundamentals on the foreign exchange market. What do you need to start with a mini lot, you know, a macro lot, a standard lot, you know, the strategies, you know, what are exactly these brokers are here for, how the Forex market works, you know, what are these pips, how do pips work, what do pips value over time, you know, and just this is a lot of historical data, but this historical data, you guys, is going to really, really help you over time. So for a master speculator who effectively manages his greed leverage is a very powerful tool, just like I talked about on my rant earlier, guys. And emotional person, you know, who tries to get rich quick, a leverage is a fatal attraction, right? So there's key things to the markets, right? Fundamental analysis and technical analysis. So fundamental analysis is basically how you're taking economic reports. So if you take non-farm payroll, PMI, GDP, CPI numbers, and so forth, and you take these into a strategic formulation, say that, you know, if non-farm payroll comes out negative this month, or if you know, the GDP comes out negative this quarter out of the US dollar, with the tariff agreements, we should see a down or see a small retracement in the US dollar, right? You're taking all these into consideration, but a lot of this stuff is traded in the dollar and also in technical analysis as well, right? So the dollar is a cash cow. So a lot of these currency pairs that we look at are traded against the dollar. So when you're looking at trading in the markets, this is a fundamental part of it, is that when you're using fundamental analysis, take this into consideration, and this could be your focal point, but for me, I don't make this my focal point. I let technical analysis be my focal point, and I let fundamental analysis kind of be the sprinkle on the top, because now that I've been able to establish a understanding of where market is structured, then I can be able to maximize my portfolio by using this fundamental analysis. And it's good to know fundamental analysis, just because you have to be very cautious and aware of what's going on in the world. Because say that you're using technical analysis and you don't know that there is say that there's an interest rate or say that you know, Powell is talking about interest rates right now, right? And we're like, okay, so what's going on? And then out of nowhere, you see a huge dump in the US dollar, or you see that, you know, there is another Brexit talk, or if there's another any reasoning for us that the market is stirred up. But a lot of this stuff is smoke and mirrors, right? A lot of these fundamental analysis and a lot of these people that go on these in these institutions, and a lot of these people that go on these CNBC, Bloomberg, and stuff like that, it's smoke and mirrors. They're a lot of them aren't lying to you, but they're giving you false propaganda to induce a fear mechanism into your subconscious mind. So then now it equates to you getting out of your positions, or, you know, or liquidating your funds, or, you know, just being very hesitant into trading the market. So technical analysis, guys, you know, women lie, men lie, but, you know, numbers don't. So take technical analysis into consideration. I do for the most of my trades. And for most of my trades, I use this technical analysis into applying, because you can see where price is going when you look into resistance and support. So what I mean by that is that you can, so say that we're looking into price, right? and we see price running, we can see that market price is obviously showing this liquidity. And then when I see the liquidity, I can see that it's obviously going down. So if I were to look at something, on the news, it's going to tell me something, but the price is already going to show me. Price is always going to show you where it's going to go, right? So women, like I guess, women lie, men lie, but numbers don't. So you don't have to really worry about, what people are saying on the big perspective if you can take this technical analysis and strategize off it. So human emotion drives order flow, okay? So human emotion drives order flow drives price creates patterns, right? So this is what we talk about when we're talking about the market structures. And this is why psychology is such a high focal point in trading, right? Because human behavior drives order flow. Order flow drives price creates patterns. That's why we can look at M formations, W formations. Excuse me, guys. Look at Fibonacci. Look at the Elliott wave, right? These are just pattern recognition of a emotional vibration, vibrational frequencies, right? So these patterns tend to repeat themselves over and over again. Crowd psychology has been reflected in price, stocks, indices, commodities, futures, currencies since the beginning of the free market, you guys. Since the beginning of time, everything is based off crowd psychology and a reflection based off drive of price. That's why we talk about when we see these liquidity consolidation points, then we see a breakout after that. All we're seeing is this consolidation, and then we see order price flow. We see that the market is now making this structure low. Obviously, for me, I'm seeing this as a stop hunt to the downside before we see a reversal. So, I'm looking at it a little different. But say that, for instance, that most people are looking at this as an area of consolidation, right? So this consolidation of this area is now considerably a focal point, right? So then now we're looking for a breakout. So for me, I know this is a breakout to the low, induce those buyers to go short, and then take price higher to trap all of these sellers. But forget that. Forget all the strategies. Just think about it from the basics, the fundamentals. All this is, you guys, is that price is based off human behavior, human market flow. So when we see these, all we're looking is that people over justified optimism, under justified pessimism. The market is oversold. The market is overbought, right? The market is oversold. The market is overbought. Oh my God, the market is going too low. We got to bring price back up. Oh my God, the market is too high. Oh my gosh, there's too much price in this area. Let's move price lower. Oh my gosh, there's too much price moving in this area. Let's move price lower. Wait, this is an over-justified optimism. Let's move price higher. That's over and over and over again. It's just market psychology and market flows. So very, very great stuff. But that's why. So today JVP dropped like 700 pips, then reversed, and the gains now. Big long hammer wick. Yes, exactly. A lot of reversals. A lot of market structures, a lot of different things are going on to the market. What do you use for fundamentals? I use investment.com. Is the biggest one that I use, because if you go to investment.com, you're able to see all the upcoming news. All you got to do is click on the news, and you can get all the updates every single day. It goes straight to your phone, and you can have an alert button as well. So and Market Watch as well is a really good one I use as well for markets. JVP, JPY. I'm not a big JPP, JPY fan, but I know that, I saw a lot of these prices, Michael, are totally integrated together. You can see that the market can drop, and the 700 pips, I'm going to have to check on that, because that's a lot of pips in one day. Maybe 70 pips. And then when you trade the stock market, like Amazon. Well, where can I trade the stock market like Amazon? You can go to E-Trade. E-Trade's a big one that you can be able to go. That exchange broker is a really great broker. I've never had, and Thinkorswim, excuse me. That's a really good broker as well. And what an exchange like Binance, where I can sell and buy whenever I want. That's a really good question as well. It depends on what you're trying to look for. As of the Forex currencies, you can go to Forex.com, Awanda, Trader's Way. There's other brokers as well that will give you perfect. Trader's Way actually is able to trade against Bitcoin now, gold, silver, futures market. They have a lot of different prices that you can go to. Forex.com definitely focuses straight on currencies, but they do have gold and silver you can trade against. And then Oanda as well has Bitcoin as well. They just actually established that in March, I think, of this year, and they did other things as well. So I hope that answers your question. So yeah, big flag pattern as well. Huge for the JPB, JPY. Can I trade Amazon on E-Trade? Yes, you can trade Amazon on E-Trade. You can look up their broker and just go online, and they have a whole list of things that they trade. Right? They have a whole bunch of things that you can trade on the market anywhere in the world. So I don't know the question to answer that question actually. So meaning that anywhere in the world you can trade the markets. I mean, yeah, you can trade the markets anywhere in the world, but you can't have brokers outside of your jurisdiction. It's just for tax. People try to do tax evasions. People try to do offshore accounts and stuff like that, and to manipulate price. It's very, 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 very highly regulated. So I don't recommend doing that. Oh, for the U.S. You know what? If you go to our Discord group after this, I'll look and research that for you. I know we had that question from other people, but I'll answer that question in the Discord group. If you go to there afterwards, I'll be there, and I'll research for that. I'll research that for you, so you'll have that answer. So I hope that answers your question on where moving forward with the brokers. So you guys, I'm really happy for you guys to be on today's live stream. We talked a lot about the fundamentals on price, and I do want to just talk before I get off a little bit about the price sections. We talked a lot about the fundamentals. I want to break down a little bit of where price I believe is going in the near future, and then from there we'll go with tomorrow. We're talking more so about the fundamentals, and we're going to break it down step by step. So by the end of this week, guys, you'll have basically a blueprint that you can take into your trading strategy to be able to apply into the markets. So let me just actually remove all this, and I'm just going to go on a naked chart for a second, because there's a book, you guys, that I do recommend you guys look up. It's called Naked Forex, which is a price chart book that just talks about a lot of structures, supports, resistance without any indicators, oscillators, and so forth. You're able to dissect price by just seeing price for what it is. And this took me a while to understand, because obviously everybody's like, how do you trade price without any moving averages, without any, or very little indicators? Is because you really don't need all that stuff. You can use it. It's very good, because all of it is confirmation at the end of the day, right? When you look at price, it's just confirmation. So say that we see price right here, and I'm not going to go more so into back history because we already went through that last week, but you see how there's information, and then you see it right here, it comes back up. This is called a stop hunt. So when the stop hunt comes, we're looking for the price to reverse, but then we see the opposite on previous, but we just see the same thing on the market price again, where this is essentially market retraced, comes down, induces those sellers, and then we're going to see price take off to the upside. Because if we look at it from an institutional aspect, there's not a lot of liquidity to be made from downside momentum. It's more so upside momentum, because the upside right here is showing where all the money is. So right here, we can draw down people's positions, get them in their money, get them into profits, and then scoop price back, Tuesday, right? This is Monday, Tuesday, Wednesday, Thursday, we might see a reversal to the upside. So this could be a weak strategic plan, but I do recommend you guys, with the moon cycles being a highly in equation factor, we should see a reversal. And I want to actually, so you said that JPB, JPY, we're looking at that earlier. We'll check that out. Price reversed and saw that information. So yeah, it's kind of integrated into the same thing where we saw that information. We saw that little price consolidation right here. We saw a breakout, and then we see an upside momentum back to the upside. So theoretically, we could see a reversal on JPP, JPY, as well as the US dollar. Do I think that it's going to test August lows for the Great Britain pound Japanese yen? I do think there's a lot of momentum to this side for the Japanese yen than there is for the US dollar, but with taking consideration, a lot of them are very, very integrated. So, you know, we're going to see price move not necessarily in the same direction, but we're going to see price move into a direction that shows a lot of confirmation for both of these pairs. So I hope that answered you guys' question on a lot of these elements. And yeah, I can definitely mentor you one-on-one. We do have that available in our Discord group. So if you go into our Discord group, you'll be able to see that we do have one-on-one counseling available for you as well. So I'm going to end this live stream, you guys, on a good note and just say thank you guys for being a part of this. And this week is some very, 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 very exciting information, and not just that, life-changing information if you let it. We're going to just be able to break down step by step the fundamentals on how the Forex market works, from how the investment bankers work, from how the best formulations that they use, the M&W formation, the stop hunts, the liquidity drop hunts, everything, how the market has zone hops and everything like that. I'm going to be studying, you know, day in and day out for you guys to be able to give you guys the best information possible. So if you have any questions at this time, please meet us in the Discord or put in the comments here before I get off. And not just that, you guys, if you can, just like and subscribe if you haven't, if you're new to this channel. I really congratulate you guys for taking the time out of your day to learn about the stock market, to learn about the Forex market, and to just become better traders in general. So I appreciate you guys. I'm sorry about the technical difficulties that happened earlier on, and I will see you tomorrow in our next video. All right, guys, take care.